we're seeing silver. This article is seeing a growing deficit as supply struggles. So supply is struggling while industrial demand is exploding in silver. Hi, this is Mike Maloney with a little bit of update on gold and where we're headed. This article from Zero Hedge is Matthew Peipenberg, and why gold is rising now, where it's headed, and where it's headed tomorrow. And in this article, it's a great article, but as I was reading it, it's sort of an update on some videos that I've produced, quite a while ago, actually. There's a short video titled 140 Years in 10 Minutes, and it's about the shift in all of the different gold standards and how gold has flowed through. It's showing what has had. It's the history of precious metals and the monetary system in that short 10-minute clip, and it's actually taken from episode 2 of Hidden Secrets of Money. So this goes back to about 2010. So if you haven't watched this before, you might consider watching it now. De-dollarization is the other topic. I did a video back in, I believe it was a 2012 appearance. So it's an episode 3 of Hidden Secrets of Money. This clip was taken from it, and we released a video about a year ago. And the thing is, people think that I'm talking about today when they watch this video. And this is all information that was presented back in 2012. It's just that, the death of the global dollar standard is unfolding very slowly, but there's these nails in the coffin that keep on coming, and they're coming faster and faster, and it'll keep on unfolding slowly until the day that it doesn't, and then it's going to happen very quickly. And we will see, if you look at that 140 years of history in 10 minutes, all of the dollars that are offshore, that are around the world being used in trade in the SWIFT system between banks, as reserves at foreign central banks, inside brokerage houses to do things like buy oil and buy things that are dollar denominated. All of those dollars, if we go on to any like IMF basket of, if they do CBDCs that are international, basically for international settlement, and come up with the BRICS countries and so on, trying to get around the US dollar. This is not a fast process, but it's happening faster than it was back then. But that is the death of the global dollar standard, is the de-dollarization, and it's part of episode 3 of Hidden Secrets of Money, which was a live presentation that I was giving in Singapore back in 2012. And so that article is sort of updating all of these and adding brand new information that is very good to read. But what is driving the price of precious metals right now? And as we know, part of it is central bank buying and selling. And we were net sellers up until the global financial crisis. And then the world's central banks became net buyers. But who is it that's buying? If you watch Alan Hibbard's great video, Chinese Gold Trading Explodes, you'll see that it's the East that is now buying. And so in there, he shows this chart of East versus West, and you look at how much the East had. Now, I want to point out that this chart starts at 15 million tons and goes up to over 36, 37 million tons, but it starts at 15. So this looks like the East has half of the world's central bank gold. Well, they don't. There's, each one, this is 10 million. So there's, basically this much space at the bottom of this graph that's not being shown. This is Nick Laird's graph. I just wanted to point that out. But as a percentage of the world's central bank gold, if you add from 30,000, this 15,000 tons down to the bottom of this chart, you see that this is only like 3%. It isn't even 5% of the world's central bank gold. And now they've gone to a significant percentage, about a third of the world's central bank gold. So that's one of the things that's causing the buying and all of the explosion in gold trading in China. And then Luke Groman reminds us that, yes, Chinese buying is helping drive the gold price, but here's why. And they told us back in March of 2009, they said that that the world basically needs the U.S. dollar as the international world reserve currency. They're proposing replacing the U.S. dollar in a new global financial system controlled by the International Monetary Fund. Well, since 2009, we've had the advent of all of the world's central banks working on central bank digital currencies, and that makes them very easily create a reserve basket of currencies that are other than the US dollar, and it will probably incorporate the US dollar, but it won't just be the US dollar. Well, that means that now there is, just as I predicted at the end of that 140 years of history in 10 minutes, you'll see that half of the dollars that are created reside outside the borders of the United States. And if they don't need those anymore for settlement, like, oil is no longer exclusively traded in US dollars. It's now, if they have this basket of currencies, things will be settled in more of an international currency. And when it comes to the replacement for the SWIFT system, whatever that is, it's going to be something more like this basket of currencies that are more stable than the exchange rate of the US dollar to each individual currency. And so as all of these trading houses and banks and central banks don't need all of those dollars, what do they do with them? They come over here and buy US dollar denominated assets. And we've experienced something like this in the past. In the late 80s, Japan was having a stock market boom, and they all felt extremely rich. And the Japanese came over and they bought MGM, which is now Sony Studios, and they bought Rockefeller Center, and they, all of the very best real estate, and prices on all of that stuff went ballistic. So inflation can be caused not just by the Federal Reserve creating brand new dollars and by bank credit creating brand new dollars, but by all of the dollars that are already stored up outside of the United States coming back in suddenly and buying stuff. And that eventually would be where we are headed. This is all animated very nicely, so I would suggest watching either that episode 2 or the 140 years of history in 10 minutes. Why a powerful silver bull market may be ahead. Another great article. And then I found this one. We're seeing silver. This article is seeing a growing deficit as supply struggles. So supply is struggling while industrial demand is exploding in silver. So this is the fundamental deficit that we are seeing in silver right now. And it's one of when you add that to the fact that silver is one of the monetary metals. So what is it that people run to as a safe haven? There's bonds, and there's cash, and there's gold, and there's silver. Those are like the 4 monetary assets, really. And silver has this industrial demand at the same time that it is a monetary metal. And the silver supply side mostly comes as a byproduct from mining copper, lead, zinc, and gold. And if the world experiences a sudden crisis, it will probably go along with a global recession, which means that there's less copper, zinc, lead, and gold, or not gold. Gold will be mined more, but copper, zinc, and lead, where the majority of silver comes from. So silver supply will be going down, just as this demand for industrial applications might fall, but just when everybody wants it as a safe haven asset, the supplies dry up. That is one of the big fundamentals underlying silver that is so incredibly positive. Now, back in March, we were going to try to slip this into a video, but for some reason we never did. We just didn't figure out how it goes in there. But this is one of the HSBC vaults in London. This is millions of ounces of silver. And you see it here at about 52 million ounces, and then it jumps up to 75 million ounces. Well, take, $27 times that many ounces. And this is a huge purchase. And it was on, I believe, one of the days where silver was rising. So this was part of the rise, and nobody reported on it. And so there you are. This is what is going on in the world right now. So I think we're seeing this little pullback in silver as I make this video, but I do think silver is headed for some really big things coming up. Now, Hugh Hendry reminds us that once and for all, gold versus the miners. He's laboring this point because the environment for gold looks impeccable. And throughout history, basically, the mining stocks can offer you leverage, but they seem to offer you more leverage on the way down than they offer on the way up. And that is because they are some of the greatest inflators on the planet. They're constantly cash poor. They're constantly looking to do a private placement. And when they do a private placement, they can create brand new shares that didn't exist before. And they're diluting the pool of shares, just like the Federal Reserve dilutes the currency supply. Every time they buy something, they type new currency into existence. And so that is what's going on with the gold miners. So here he has the price of gold in blue and the price of the stocks in the GDX. So this is the GDX indice, the GDX stocks plotted in white. And you can see that the stocks have not kept up with gold, but this only goes back to December of 2006. I think that's probably when the GDX was created. I'm not positive right now. I didn't check into that just before this video. But in my book, I took this back to the day that gold became freely traded, August 15th, 1971, to see how you come. And so what gold index goes back that far of gold mining stocks? Well, it's the Barron's Gold Mining Index, so the BGMI, Barron's Gold Mining Index. And I've got this and the price of gold indexed to 100. So this is the change. And what you see here is that, divide this number into that number. And this was published in, we did this chart in 2022. So right here, you're seeing gold, it had put in a double top, and it was going to put in the inverse head of the inverse head and shoulders. That hadn't happened yet. And since then, we've taken off and we're up here somewhere. Where is the Barron's Gold Mining Index? We'll need to update this chart for you sometime soon. But it just shows that unless you've got the proper guidance from a really qualified mining analyst, it's best to just steer clear. Gold and silver don't need any leverage to have massive, massive gains in the future because it's coming with the next great financial crisis. And you know that it's going to happen because there's always another one just around the corner. So I want to leave you with this. It's meme type of the day. There's gold and gold stocks on the average. I want to thank you for watching. We'll see you next time.